Ladies and gentlemen, please welcome on stage Mr. Jason Mizen.
Better than that. It was quite interesting. I've never read my bio before or someone introduced me like that. And I can just tell you I'm just a broker. Okay, I'm just an insurance broker. There's nothing special about what I do and how I do it. But having said that, I think I've got the most glamorous topic of the day, which is short-term insurance. I think if you didn't catch that as a joke, then you must understand. It's been an interesting one. I mean, today you're going to hear about investing for the future and protecting your family's well-being and all of these things. But then we get to short-term insurance, and they put me right in the beginning of the day, probably because you might fall asleep through this presentation. So hopefully you don't. But today I'm going to be speaking about just the unseen risks of insurance and being underinsured. And I think it's something that we've seen in the last few years. In the last few years, we've seen claims in KZN. I mean, there were floods all over KZN. We've seen hailstorms randomly, tornadoes in Bloem. I don't know if anyone saw the tornado in Bloem. That was crazy. We've got the Cape fires in Knysna and in Cape Town. Those things, that fire wiped out people's homes, people's livelihoods. So it's very important to understand that throughout the last few years, insurance has changed so much. We've seen different types of claims, and actually no one's reminded me of this, but COVID, hello, that was a massive, massive thing that happened to all of us. So people lost their jobs, people lost their lives, and I'm not going to speak too much around COVID because we know there were a few technicalities around insurance and how they paid and why they didn't pay and et cetera, et cetera. So I'm going to just talk about some of the things that we can do to stop us from being underinsured. And I think we look at underinsurance as not being insured enough, but I also think it's not being insured correctly. And I think I want to just touch on that. So the grudge purchase. Insurance. We all pay our bills every month, and the one thing that we want to cut is our insurance premium. Is it just me? I don't know. I want to get rid of my insurance premium. I hate paying it. It's something that every single month as it comes off my account, I think, okay, how can I make that bill smaller? And I think that mindset around our premiums and how our insurance actually works is the incorrect mindset. We need to start looking at it as more of a safeguard than a grudge purchase. And that's why I want to just point out that importance. We feel like we have to pay it. Every month we feel like, oh, I have to pay this thing. But maybe you don't. Maybe you can self-insure. And I'm not saying you shouldn't pay your insurance premium, but I do think that it's important just to have a look at it and see, do you really need to pay what you're paying? Paying for the unknown. We pay for an insurance product which we can't hold or we can't see. It's actually paying for the hope of one day getting paid out by the insurer. And I think all of us know that claims can be traumatizing. We walk around, actually every claim is traumatizing. If you've had a claim, it's a traumatic event. And I've seen this because on your policy, if you've got an insurance policy, you should have a little extension on that policy with trauma counseling. So if you've got an insurance policy and you've suffered a claim, you should have some trauma counseling available to you because it is traumatic. But what the insurers and us brokers say is that we're going to make your life easy and we're going to try and make the claims process smooth, and that doesn't happen. Every single claim that we see is traumatizing, whether it's my fault, whether it's the insurance company's fault, or whether it's even your fault as a consumer. And I think it's so important to start moving our mindset as consumers away from this grudge thing and understanding the importance of having the insurance and then changing that to fit yourself and your own situation. So it's very, very important that we move away from this grudge purchase. And we only really want insurance or need it when disaster strikes. So we only really see the value when the proverbial hits the fan. And that's what I'll talk about today. So how should we view insurance? What should the mindset be around insurance? And I think we need to move from, I've already said this, I have to pay this, to it's a safety net, it's a safeguard, it's something that I'm investing in to protect everything else that I have. Because insurance is actually the foundation of your financial plan, and I'll talk a little bit about that now. The second part, once we've actually adjusted our mindset and we've changed the way that we think about insurance, our car and home insurance, our business insurance, I think we then need to look at the reality. So as a consumer, if you're not sure what to insure, first think about insurance, know that it's important, and then start to look at what your situation looks like. If I've got my phone in my pocket, and the reality is it could get stolen today. I could drop it while I'm speaking to you. And luckily, I don't have my notes on my phone. But if I was reading it and I dropped it, where would my notes be? It affects my job of speaking to you. So each risk has something to do with your own situation. And some of those risks we don't have any control over, like COVID, like fires, like all of these things. But there are some risks that you need to look at yourself. And I think that's where the reality check comes in. You need to look at your real threats and the real risks in your situation, and then what could go wrong. If you drive, you could have an accident. If you're a business owner, your business could fail for multiple reasons. So you need to see where that is important to you. And then you plan. So you've realized that it's important, and then you put contingencies in place to actually cover yourself. Now, I must say, insurance companies are meant to pay claims. We know this. They're meant to cover us. But what I want to just address is our responsibility as consumers, because an insurance contract is two-sided. It's a contract. The insurer must pay, but only if you hold up your end of the bargain. And that's where the underinsurance comes in. You have a contractual obligation on your insurance policy to actually uphold certain requirements, certain things that you need to do to make sure you have cover. And I think that that's where we miss things. We need to make sure that we read our policy and we stick with those requirements. So remember, as a consumer, you have a responsibility. And that's what I want to try and push on you today, is remember that there's a responsibility on your end to ensure that you are insured. So I like to think of insurance in a different way. I don't like the word insurance, even though I'm an insurance broker. Protect broker doesn't sound right. So, but I want to change the mindset around insurance and the word insurance, and move it more in line with protection. Protection is what we're talking about. And in my financial plan, I generally look at 4 different things that I plan for. And every financial planner would follow these 4 things, in my opinion. They're my 4 pillars of my own financial planning that I would do with my own clients. And the first thing is pursue. Pursuing goals, pursuing your objectives, and identifying what you want to achieve one day. So we're all here to do financial planning and to plan our money. And I think pursuing those goals and actually having a visualization of what you're going to achieve is so important, and being financially free. The second thing is planning. You have your goals, now you want to plan to get to those goals. You need a strategy to actually get to that place. And throughout the day, you'll learn different strategies to put that into your financial plan. And then the third pillar that I usually look at, and it's actually the foundation. It's not a pillar in my mind, but it just rhymes because it's pursue, plan, protect, prosper. It sounds nice. But the protect side is actually the foundation. Discovery will tell you it's vitality that's the foundation of everything. I'll tell you it's your protection. Okay, so when we protect ourselves, we can look into different facets of our life, not just our car and our home. And I'll get to that. And then prosper. Prospering is obviously the end result of your financial plan, the success that comes from actually putting all of these steps in place. So what do we protect? Now I'm going to give you some practical tips of how you can actually build your insurance policy and just protect the things that really matter. So what matters to you is the question you should ask when you're looking at your insurance policy. You should, in my list, it's God, and then it's health, and then it's family, and then my stuff, and then maybe my income should maybe be a little bit higher in my priority list. But these 4 areas of your life are probably the 4 areas where you should have something that matters to you. Okay, if not the whole pillar itself. Your health is the foundation of everything. It flows from everything. So how do you protect your health? Anyone want to have a go? Medical aid. Well done, whoever shouted that out. Okay, so medical aid, gap cover, that's how we protect our health. So there's a policy or product that protects us with our health, with our family. Someone will speak about it a bit later, but we've got multiple things that can protect our families when you're not around, like a will, like life insurance, like dread disease cover, all of those type of covers. We also have our stuff. We need to protect our stuff. On that list can be the most important stuff. And I'll talk about stuff now. And stuff in brackets, assets. So if you don't have stuff, then just check if you've got assets, just in case. And then our income, the largest asset of all. I'm sure you've heard about it, but for the next few years of your life until retirement, your biggest asset is your income, and we should protect that. And protecting it comes from income protection and other insurance policies that can be taken for that. So what do we insure? We insure two things. We insure what matters most to us. We protect what matters most to us. And then we protect what could bankrupt us. So if you're building your own insurance policy, you need to have a look at those things. What could bankrupt you in the moment? If your house burns down, will it put you in dire straits? If the answer is yes, you need insurance. If the answer is no, sure. Can I use your credit card, please? Because I would love to make sure that my house, if it burns down, I'll be able to pay for it with cash. But that's the other side of insurance. You can self-insure. You can save. And one of the protection things that I didn't mention is your emergency fund. An emergency fund is a protection vehicle. You can use an emergency fund to not claim. If your emergency fund is big enough to pay for your cell phone if you drop it in water, then you can use it if it's an emergency. But remember, it's a small part of your whole protection because there's a gap. There will be a gap, and that's where insurance comes in. So two things: protect what matters most to you and protect what could bankrupt you. And this is the fact, because no one likes insurance, and that's why there is underinsurance. I mean, I've seen the statistics where there are so many people that don't have insurance, and I still can't fathom why. If you're driving a car, just get insurance. The problem is insurance is becoming a luxury. I think you can agree. It's expensive. I see all the nodding. Sure. And I'm a broker, and I'm sitting here and I'm thinking, flip, I'm going to have to try and save 500 Rand premium and give you a voucher like those green and purple people on TV. But 30% of South Africans, that's another way of saying it, is 7 out of 10 South Africans do not have house contents cover. Now, if you just think about it, in Knysna, when everything burnt down, half of those people didn't have sufficient cover, and the other half didn't actually have cover. So it's very, very important. Those people are probably still paying debts that they needed to take on because they didn't have the cover in place in the first place. Another statistic is that we've got the highest accident and theft ratio in probably the world, mainly theft. I could tell you the cars that will get stolen, but they might be in the parking lot downstairs, so I might not mention it. But I'm just putting it out there. Every week I see a Fortuner get stolen. So if you're riding a Toyota Fortuner, please, just put 4 trackers into it or something. Funny story, actually, there was a car that was stolen, one of the claims we dealt with. And I don't know if I should say this, but I'm going to anyway, whatever. And the car got stolen, and they actually recovered the vehicle in a policeman's yard. So I'm just putting it out there. We have a very high theft and accident statistic in South Africa, and we don't get the help that we need. So that's just a sidebar. And then businesses. 40% of businesses are underinsured or actually just fail because of some sort of risk or something happening to them. So it's very important, and this was seen in COVID. A lot of businesses didn't save enough to help with cash flow. And over and above that, they didn't read their insurance policy to understand business interruption. Business interruption cover is actually only linked to a fire claim or a fire clause or section in your policy. So, and then there's obviously a few companies that would offer these weird and wonderful clauses that you can have cover for. But you must remember, not everyone is the same, and that's why you need professional advice to give you that direction to actually give you the cover that you should get. But that's a big one. Businesses fail because they're not covered correctly. And if a business burns down, you could actually have all 3 of these in one. That could fail. You could fail a business. If my warehouse burns down, all my stock is gone, how am I going to get my stock back? I need to pay for it. That's where the insurance comes in. But there's a gap when I have to, with the order. Take a lot takes 2 days, I know. But if you're ordering a massive machine to continue your production, then I think it's going to take a little bit longer. So you've got an interruption of business for a period of time. And that's important to cover. But we don't like insurance. And that's why we need to change our mindsets. So this is the common definition of underinsurance. Underinsurance means a person has insurance coverage, but the limits are just not high enough to pay a full claim. My definition is it's an insufficient or inefficient insurance policy that causes underinsurance. And what do I mean by that? Well, firstly, insufficient. Exactly what the word is. It's not enough. We don't have enough cover. And I think when we do our reality check and you see what could bankrupt you, I need you to have a look at what could bankrupt you and make sure that that is at the level that you need it. That is the most important. The second thing is the inefficiency of a policy. I've seen so many quotes come onto my desk with people looking for insurance, and I can pick apart that policy left, right, and center because it's not fitted to the client itself. It's not fitted to that person's needs. It's not fitted to structure, or it's not structured in a way that you can actually claim for it, for whatever you want. And that's where we need to be careful. There's two things that you must remember: insufficient and inefficient. And the efficiency part is where a professional can help you. If you phone the call center at the green and purple people, you phone them, they will help you and you'll get cover. But will it be tuned into what you need? And will it be efficient enough to pay the claim when you need it most? Because remember, insurance only really comes about, or the value of it only comes about at claim stage. So what happens when you're underinsured? Well, I've briefly spoken about it, and it's pretty basic, but we lose our assets, okay? We could lose everything if we are underinsured. I'll use a building or your home as an example. It's generally bonded, so you've got a debt on your home. If that's burnt down and you do not have insurance, how are you going to pay the loan and purchase another property? You cannot do that. It's physically impossible most of the time, unless you're super wealthy and you're self-insuring yourself. But most of us are in the same boat. If our car gets written off in a major accident, we're going to need to buy another car to take our kids to work and all those things. So it's very important that asset loss, you need to put contingencies in place to replace those things. The second exposure that you might have when it comes to insurance is legal. This is the sneaky thing. This is the sneaky one that creeps up on you when you reverse into a pregnant lady in a parking lot, and I've seen it. So, these are all real stories. I'm not talking rubbish. A client of mine reversed into a pregnant lady, barely hurt her. It was like a little bump, and she just sat down and she said, "Oh no, I'm going to sue you." And there it was a whole legal rigmarole about how this baby could be mentally challenged for the rest of their life because of that little bump. Turns out they were fine, nothing was wrong, but the insurance company at least helped them out to pay for their legal bills. So legal exposure is massive, massive. Also, another thing, if your building burns down and it burns next door, have you ever thought about your neighbors suing you? Because your fire caused that? So there's liability that comes about everywhere. And then the third one is your business could close. These are the three biggest things that happen when you are underinsured. And all three of these things can happen at once. And that's the scary thing. An example on just number 3 there. I had a client, I'm not going to mention their name either, but they have a restaurant. And in a strip mall, you know what a strip mall is? You know? A mall outside with all the shop faces outside. There was a big discam that burnt down a few years ago. I don't know if you remember, on the West Rand. Massive discam burnt down, and it burnt the whole shopping center too. Funny enough, my client's restaurant was not touched by the fire. His was in the corner and it all burnt everywhere except him, pretty much. So he was kind of fine. But the smoke damage and the heat on the walls basically damaged everything inside anyway. So all his food went off because the smoke was there. All his chairs needed replacing, all his furniture, everything was a write-off. His whole business was closed, and it was because of discam. And now that fire also started randomly. It was a very strange fire. I'm not going to go into detail about that. But this client saw us 2 weeks before this fire, and he said to us, "I want to save on my premium." That's also a red flag for me. If you want to save on your premium first, let's talk about cover. Let's talk about premium afterwards. Okay. But he basically said, let's save on premium. And we said, okay, we'll remove your cell phone. No. I need my cell phone covered. It runs my life. I need it. We said, okay, fine. Well, what about your laptop? No, I need my laptop. And then he goes to the section called business interruption. And he says, this is very expensive cover. I want to take that off. So what I do is, behind the scenes, we think, okay, let's save this client a bit of money. A few years ago, brokers could do what they want. I was there. So we decided to change some premiums, move things around, and keep his business interruption on his policy without even him knowing. I did my job, in my opinion. The Wimpy burns down, or the whole mall burns down, and now we're sitting on a Thursday, I think it was, morning. The fire trucks were watering everything. Ankle deep or knee deep in water in the parking lot. So you must understand the fire engine was making more damage than the fire probably as well, with all the water damage. And the owner stands in the water with his knees in the water, and he says to me, what do I do? And I said to him, it's okay, you've got business interruption cover. He was closed for a year, and we paid him out every single month his loss of profits that he would have suffered. He could pay salaries, he could pay his own salary, he could pay for stock. And that was the most important thing on his policy. So when you're looking to save premium, please look at what can bankrupt you and what is most important to you first before you decide to cut premium and save some money. People go wrong because we actually have insurance gaps all over the place, and we often do these same things. We underestimate our values. When you look at your house contents, your crockery and your cutlery actually sits in that value. So don't forget that. That might be a good 2,000 Rand extra that you must add to your policy. But very important, replacement. If you're going to insure anything, insure it on replacement value and make sure that those values are high enough. I'm running out of time, so I'm going to skip over a few of these things. You can take a photo if you want, but these are the things where we do see underinsurance happen. How do we avoid underinsurance? Well, first thing is regularly sit down and actually make your insurance policy part of your financial plan. Don't just sit with your financial planner and go through your investments, because if your insurance is not there, you might not be able to invest when you lose everything in a fire. So very, very important, regularly review. Look at replacement values. Don't skimp on liability. I've seen people take off liability cover because they want to save $50 a month. That's, I don't think it's the right thing. Factor in inflation. Every single year, things are more expensive to replace, and you need to realize that. So ensure that your values of your insurance policies always go up every single year. Get professional advice. I think I've highlighted the need for me, I hope you all contact me for a quote. No, I'm just joking. But that's exactly it. You need professional advice. And when you have an advisor that knows what they're talking about and knows and looks at your needs first, they can tailor something to what you need. And that's why I say insurance is not a one-size-fits-all kind of thing, even though the green and purple people have told us that it is. These are questions that I ask myself when I go through my policy. And you can ask yourself the same questions. What are the most valuable assets in your life? This is a question that I've brought up throughout this chat. What can bankrupt you? What is most important? The right amounts, your replacement values. What risks are you likely to face? Have a look at your own life and see what risks you could face. Do you have enough liability cover or some liability cover? The question here, the purple block over there, or the pink one, how would my family cope if something happened to me? What if you died in that car accident? It's not just your car that is now gone. You are too. And I think someone will touch on that later. Is it in line with your current circumstances? Are you choosing the right insurance for you? Are you choosing the right insurance for you, or are you just buying insurance because your brother told you to get insurance on your car? And then are you working with someone who is qualified? There are many advisors that focus on a specific thing in their business. Talk to somebody that knows a little bit more about that specific thing. If it's insurance, if it's estate planning, if it's medical aid, it's very important to get a specialist on there. And then just a quick cover checklist. And this is my list. And if you had a professional, they should go through these things with you. But if you don't have a professional that can look after you and help you, these are the things you need to check yourself. You need to read yourself, and you need to make sure that you understand it. Your cover limit, how much cover you have, and how they value that cover. Is it retail value? Is it market value? Is it replacement value? Your excesses, what your excesses should be. the extensions, the additional cover, not too important because they come for free usually, but it's important to have it. Exclusions, this is where you plan against them. Read those exclusions. Guys, just by the way, if we all go to war, you're not covered. There's no cover for war. There's no cover for terrorism. It's not there. But make contingencies because, we all see what's happening in the world. So there's a lot of stuff that we could talk about. And then your terms and conditions. And then I just want to close with the 2 quotes. Insurance isn't just about damage. It's about preventing financial ruin. You need to protect your financial plan with the different types of insurance that you could get. And I think this is where you can avoid being financially ruined if you have a major claim. And then lastly, just a closing note from myself. Short-term insurance is not just a formality. It's a necessity. It's a financial safeguard. It's what stands between you and financial disaster. It's the shield in between. And that is just when something is about to happen and you just can't foresee it. And this is why we need insurance. So I hope you enjoyed my chat today, and I didn't bore you about short-term insurance and car and home, but thank you very much for your time.